Good day everyone, welcome back to Fides Trading Channel. Today we're going to be doing the weekly flows video. It is Sunday, the 6th of April 2025, and we've had some massive moves in the previous week, which we definitely need to analyze and see how we can capitalize on these huge momentum moves in the week moving forward. So let's take a look at the previous week's movement and see what we can see. So starting with Nas100, looking at the monthly time frame, we are very much in a bullish trend. As we can see, the indecision candles from December and February compounded with the spinning top in January. We now have two massive bearish candles at play. As it stands for April, we have moved down approximately 20,000 in value per share of the indices for Nas100, and we look like we are continuing further down. We are finding some support here, but let's see what we can see. So on the monthly time frame, RSI is currently between the 45 and 55 zone, so it's within its sweet range to actually pull back. We are very close to the 50 SMA here too, which does in some way have a validity for the pop to happen really soon. So we could be hitting our levels. We don't know. We have to see how the week opens. But as it stands, the bears are in control. The bears have full momentum of this market, and we will continue to see downside momentum if we do not see a shift at levels of significance on lower time frames. So let's switch up into the weekly time frame. On the weekly, we can observe that price has comfortably broken the bullish trend, and we are now very much in that bearish trend. We are below the 50 SMA, and we are well below the the median margin of 45.55 on the RSI. Actually, we are heading into the overextended region below 30. And these are three very strong bearish confluences here. Just at a quick glance and observation, we have broken the support at 18,300. However, we do have a potential support level at about 17,300, which is currently being tested. However, as it stands with the current weekly candle close, we are very bearish. We can see this close with strong bearish momentum, and we will have to observe if the bearish momentum actually continues below the 17,300 level. So bearish on the monthly, bearish on the weekly. Let's take a look at the daily. So daily, as we can see, our indicators have kicked in. I'm just going to go blank for a second, blank charts, just so we can see what the price action looks like. So on the daily, we can clearly see that we are below the 50 SMA. We are actually significantly below the 50 SMA, which is indication of overextended regions and the need for a retracement, potential retracement. On the RSI, we're well below 30, another bearish confluence, and we do have bearish structure at play. Bringing back the trend lines, what we can observe. So we do have a support level currently at play. As I mentioned, 17,300. We can actually mark this as a bit of a zone. So I have 17,400 at play here. So potential for turnaround. We have had multiple bullish push from this level. We have 1, 2, 3 pushes from this level in the past, and there may be some validity as the markets open. The way the markets just moved after that tariff announcement was brutal, and obviously it was in the direction in which we predicted. And if you do take a look at the earlier videos, especially from February when this breakout happened, I did actually indicate that markets could come all the way down to 17,000, 17,400, and we could be looking for a turning point from here. Am I looking for that major turning point? No, I am not. I am actually following the momentum of the market and will react accordingly to how the market reacts at this key level. Moving on, we can see that price is very much broken that bullish trend. We do have bearish structure at play, and if I were to just mark it out, it is a 1, 2, 3 touch validated trend. So we have 1, 2, 3 right there. Let's get this as accurate as possible. Let's throw on a red line because it's a bearish resistance trend line. And we can see we are far removed from this trend line at the moment. So there's definitely a need for a retracement. What could we potentially see from a retracement? So we could potentially see the markets continuing bearish, however, pushing up from this level, coming all the way back up to about 19,200, which is where we have a potential break and retest level. So this is the most valid level on the daily time frame, and what this could potentially mean is price pushing off the 17,400 all the way to the trend line, to the break and retest level, closing this gap between the 50 SMA and potentially sitting within the 55-45 zone as a retracement before finally dropping. So that is my aim, would be to trade the retracement to the upside, but again, we have to wait and see what the markets do. We've grabbed a massive amount of liquidity traveling as far down as we have, so we definitely do need some sort of retracement if we're expecting the markets to fall further. Let's move on to US30. So as you remember on the weekly flows, we analyze monthly, weekly, daily, and sometimes 4 hours. If you just want to observe what's happening on the 4 hour here. We just have a lot of lines, so I do need to clean up the 4 hour bit. But like I said, as we observe right now, we do need a bit of a retracement all the way back here to collect liquidity before a further bearish move is at play. So sticking with the daily. Let's move on to the US30 markets, see what's happening here. Very similar momentum after the tariff announcements. Let's take a look at the daily, see what we can observe. So price still trading above the 50 SMA, which is great to see. Now that being said, price is in that 45-55 RSI retracement zone, which is a sweet spot, so we could be seeing a push off this market too. Similar standing as Nas100. So, please excuse me. So, we're approaching the 50 SMA, definitely decent retracement at play, and we could see a massive push to the upside. Remember, about 2 trillion in market liquidity was wiped out from this move down. So, not saying that it's over, but I'm also not willing to call bottom on this market. We could see further downside movements before we see an upside push. But per the monthly time frame, we are still very much bullish on this trend. Moving into the weekly, we can observe that the bullish trend, if we were to draw a trend line right here, the bullish trend is still very much intact. Interesting. We are testing it significantly, but as it stands, it is intact. So bullish trend on the weekly, still moving strong. Love to see it. However, we are seeing that massive retracement that we do currently have at play there. So just to be cognizant, as much as the bullish trend line is intact, price is trading below the 50 SMA, and we are below the sweet spot on the RSI, actually approaching 30. So we have two bearish confluences and a bullish confluence that is still intact, but time will tell if it actually holds up to the pressure. Now, we can observe some support here where price has tested this level at 38,000 repeatedly, and we are approaching that level with serious momentum per the weekly time frame. We can see that the way that this candle closed, there was massive bearish movement. So I hope people were able to capitalize on that. My prediction is obviously that we could have a massive push up before further push down. So we will see a bounce at this level. Where could we potentially see a bounce? Definitely towards that 40,780 level, where we could potentially see break and retest occur. So as it stands in the daily time frame, price is trading well below the 50 SMA, and we are in the overextended region below 30 on the RSI. So we are overextended on both indicators towards the bears and we are in need of a deep retracement. So I do expect that retracement to take place very, very soon. Where do I expect it to go to? Bounce up, test the 40,780 level, and then move further down. And only time will tell how that plays out. Just deleting this here. How that plays out. So yeah, massive, massive drop in the market here after tariff announcement. We do have some bearish structure, which we can mark out. Is it validated? I would say yes. We have 1, 2, 3, 4 touches in which we can play with right there. So validated bearish trend line at play. So yeah, my prediction for the week ahead, after that massive move, we'll probably collect the liquidity all the way back up to 40,780, 40,800, and then drop further down. Looking at gold. Gold has been a surprising player. So normally when the USD crashes, it being the greenback currency, it's a currency people love to use, love to play with. When USD has weakness, people gravitate towards gold. But what have we seen? Is that gold has actually dropped this past week. It has dropped significantly more than it has in a while. So let's take a look and see what's happening. Let's go into the monthly time frame. Gold still very bullish on the monthly time frame. Despite the bearish nature of the month of April, we still have massive pushes to the upside. Will we continue? Well, let's see if we can get a decent. So yeah, with the massive bullish push that we had, price is trading well above the 50 SMA. And we can see we are hitting those overextended levels, being so far gone from the 50 SMA. I mean, that is a moving average, and the current aggregate indicates that we are due for a correction, and a deep correction at that. Per the RSI, we are hitting that 85 level in the overextended region, and we need a retracement at play towards the baseline of 45.55, and we have not seen that level since September 23. Wow. September 23 was the last time we were actually within that sweet spot. But anyway, let's move on. We are overextended, due for a correction, but as it stands, market is still bullish. On the weekly time frame, so I have a lot of indicators here, a lot of trend lines here, but it doesn't matter. Anyway, on the weekly time frame, price is on the overextended region on the RSI. We can see some twin peaks being created there. We are far removed from the 50 SMA, so even on the weekly time frame, despite being very, very bullish, we are in that overextended region per the indicators. So continuing bullish with the mindfulness of the price can turn at any time. Coming into the daily, so per the daily time frame, still bullish. We have a nice little bullish trend line going on here. Price is trading a lot closer to the 50 SMA, which is nice to see, which means we can get some entry opportunities to the long side. Pricing is tapping that overextended region on a consistent basis, but we are moving towards the baseline of 45.55 before pushing higher. And if this week proves anything, it's that the bears are stepping into the market for gold. We are closed very, very bullish on Friday with a lot of indecision the days prior to that. So what can we potentially see from gold? Well, seeing as though we're stepping into that sweet spot within the RSI, definitely seeing retracement activity at play, we could potentially be seeing a push from the 3052 level, 3050 level, from the 3000 level. We could see a potential push from there, but I am remaining bullish on this pair, seeing as though we have had a decent retracement and we've collected good liquidity as we have in the past. We are towards this trend line here. We're coming towards this trend line, potentially testing it before a further push higher. So I am bullish on gold. Looking at Euro USD. So Euro USD also had some massive movements this week. But I think the biggest headlines, the biggest news came out of the indices. I mean, I'm going to take a look at the other indices that I track. Ones that we haven't really done in the past in these videos, but I think it's just great for correlation purposes. Before I go into the currencies, let's just observe what happened with the dollar index. So dollar index, daily time frame, Definitely see massive bearish activity at play here. On the weekly time frame, we're bearish for the most part with a massive spike. So what can we observe? Trump's tariff announcements happened Wednesday nights. Markets dropped significantly and then it spiked up. Do I think that the bulls are stepping back in for dollar? I do not. I don't think that in the short term we are going to see dollar bulls. I think in the long term we could potentially see dollar bulls. When the markets have settled into the new information, when traders have figured out the new strategies that they need to trade based on the tariffs that are being implemented on all these international countries, then only will we see dollar strength stepping in. What do I think is going to happen? Markets are probably going to come up, test this level, potentially test the trend line, and keep falling. So, that being said, let's go back to Euro USD. What can we observe? Well, Euro USD has been making great bullish strides on the it's in great bullish strides on the daily time frame. But we can see we are tapping these levels of resistance on the daily time frame. So I actually didn't mark these off, but there's probably a good reason for that. I just wanted on this time frame anyway. Okay, so like I mentioned in the previous week's weekly flows videos, the market was in this deep consolidation. It broke out and it broke back in, and now we're testing the resistance level of that consolidation. Do I think markets can fall? Yes. Do I feel like I'm going to trade the falling now? No. I think I'm going to still go bullish on this market. The reason being, so like I was saying, as I observe the markets as it stands, we have a break beyond the resistance at 109.444, and now we are currently retesting that level. I feel that this market still has the space to push higher. And if we were to go into the 4-hour charts, we can observe that price is trading comfortably above the 50 SMA here. We are reaching that sweet spot with the RSI between 45 and 55, and we are testing the break and retest zone. So we could see a massive push up come Monday, and I want to be on the bullish side of this market. Moving on to Euro USD, on the weekly time frame, we can see we are still comfortably trading between our consolidation zones, and then on the daily, very respectable. Again, there were not massive movements that came out of this market. The reason why wasn't involved with the dollar. We can see the markets, the European and the yen markets, are still still absorbing the news of the Trump tariff announcements, and we will have to see how that plays out in the long term. But as it stands, markets are just respecting levels, not much movement, so I'm staying out of Euro JPY for now. Onto USD JPY, we can see that the yen definitely has some strength at play here. Despite the falling nature, we do have support on the weekly time frame at 140.85, and we could potentially see a drop to that level. So let's just mark that out actually, right there. Per the indicators, we are below the 50 SMA, but I think it's invalidated just as price is trading upon it at the moment. Also, per the RSI, we are below the sweet spot. So, if anything, we are indicating bearish nature in this market, further bearish nature from the higher time frame. Per the daily, we are comfortably trading below the 50 SMA, constantly hitting those sweet spots between 45 and 55, while currently sitting in an impulse move at the moment. So, more validity here. What do I want to do from this level? Short it. I want to short this market all the way down. Not yet in the sweet spot, but once it hits that sweet spot, I will be looking for shorts all the way down. So that's the analysis of the main currencies for today from the weekly flows. Let's take a look at some secondary ones. Bitcoin, what have you been doing since the tariff announcement? Well, still very bearish in the short term. We can see markets are still pushing down. We are approaching the 50 SMA and we are in that sweet spot of the RSI. Bullish trend line still very much intact. So could we be seeing a break of this market soon? Well, potentially. What can we see happening? I would want to see price coming all the way back and retesting the 71660 level and testing this bullish trend line that we have at play. I feel this bullish trend line still needs a third touch to validate it. Per the daily time frame, well, we are as expected, we are trading below the 50 SMA and we are in a consolidation on the RSI. Still feel price has further to fall, but based on this consolidation of the RSI and how it's just winding, I would need to see a breakout and a retest before I look to trade, because we are currently not in a trend on the daily time frame. CHF JPY, very much like Euro JPY, where markets are just chilling. They making highs, making lows, making highs, making lows, and there's not much of momentum stepping in on this market. So keeping the analysis to a minimum, we see a bullish trend at play. Definitely price is above the 50 SMA, and we are currently above 50 on the RSI. So bullish, despite the massive retracements that we are seeing. Now, I just want to take a look at the other indices, and also a few other factors here. So S&P 500, very bearish at the moment. I mean, we've lost massive gains. All the gains that we have accumulated since, I want to say, October 2nd, that movement has been wiped out now in the matter of just under 2 months. We've wiped out all those gains. Can the market fall further? It is too soon to tell. But based on this, yes, we are approaching support zones at 4,984. We are at a support at 5,150. But the extreme nature, if we were to just switch to a line graph, the extreme nature of this fall, I mean, it is hard to predict what's going on within the markets right now. We are just in a massive liquidity grab. Right now, how I'm treating the markets is like a falling knife. I had some entries, I took them, I closed them. It's all good. I missed the main move, that's fine. But if I were to short as the market currently stands, it's like trying to catch a falling knife. What that means is I may get lucky and I can catch that knife and catch some amazing gains on that knife, or I could potentially stab my hand, which means I blow my account. I am a confirmation trader. I like to trade sustainable results. What does that mean? I want to see the markets retrace, potentially test that 5515 level and then fall. Do I believe the bears are in control? Absolutely. Do I believe the bears are going to continue to remain in control in the short term? No. I think the market needs to collect further liquidity before it falls. And for that reason, I could potentially see a push up in the coming week. Now, we've analyzed this. I mean, we can see the indices across the markets. If you just take a look on the side here, we've dropped 6% on the S&P, 4% on the Nikkei. I mean, FTSE has dropped 5.5. The European stocks have dropped 5.5. Tesla dropped 10 points, 10%. That is insane. So it is a bear market all around, and it's a bear feeding frenzy. Let's also just analyze the US bond market. What can we see on the US bond market? The markets are falling. Value is falling. It is no longer bullish. Value is dropping here. And that correlates to the drop we are seeing in the dollar index. We are going to see more push down before we see a push up. And it will correlate here. Looking at the VIX index, we are now at the 45 level, which means people don't want to take risks. When we're below 20, it's a risk-on environment. When we're above 30, it's a risk-off environment. And right now, we are well above 30. We are well above the aggregate. We've actually smashed this level here, which we previously thought was massive in August. People are afraid of the market right now. And there's a massive wealth transfer happening in the country. Well, in the global economy, actually. So we're definitely going to see a lot more volatility before we see stability. And it is an awesome time to make some great gains. And I wish everybody the best in their trading. Before we go, let's just take a quick look at the fundamentals for the week ahead? Well, let's analyze the fundamentals from the past week and for the week ahead. So if you haven't had a look at the news from the previous week, I would suggest you go take a look at the tariff announcements. I mean, there have been extreme move based on the Liberation Day tariffs that Trump has implemented. And in turn, the markets have dropped. I mean, we have, yes, as expected, unemployment claims are lower with most of production now taking place within the US based on these tariffs, not to mention non-farm payroll. Unemployment rate still very aggregated, but the employment change definitely has gotten better, and in turn, that has pushed the market in the favor of the dollar, but at the same time, dropped the indices significantly. Why have the indices dropped significantly? Because indices deal in international global business, whereas these changes are just good for the US right now. Well, are they good for the US? That's still to be determined. But based on the news, it is good for the US. So that's what's happened this previous week. I urge all of y'all to take a look at some of the news that has come out of the previous week. But let's see what we have for the week ahead. So Monday, no news. Tuesday, no real red folder news. We have the BOJ speaking on Wednesday. We have core CPI news on Thursday. So Thursday is a massive trading day. And then Friday, also core PPI. Definitely need to keep Thursday and Friday on your books as a fundamental day to trade. So that is it for our weekly flows video. Massive movements. The markets are shook up, but when the markets are shaking, this is a good time to make some money, provided you have done your homework, you're on the right side of the analysis, you are managing your risk, and you're trading according to your strategy. And with that, I wish you all a successful week, and I will catch you in the next video. Cheers, everyone.